Hi guys. This is the last video for the week, and this is the sixth tenet of Dow. I hope you've seen the earlier videos. We're discussing Dow theory here today. So the sixth tenet states that a trend is assumed to be in effect until it gives us definite signals that it has reversed. Innocent until proven guilty. Same concept. The law of momentum, same concept, that an object continues to move in a particular direction until an external force acts on it. Similarly, in technical analysis, we have several tools, okay, and they will give us several red flags. Okay, now for this, the best example I can think of is still this same ICICI example. Until we study more tools indicators, this is the best example that I can give you today. Okay, out here the trend was clearly up, as we saw on the weekly chart, and this is at the upper extreme of the uptrend, which started all the way here at a price of 260. Okay, at several points in this uptrend, we must have thought, कि अच्छा, now the trend is over, now the trend is over, but it just kept on going up until there were a certain set of evidences which we got. Okay, one evidence was how the volume shifted. Here the volume was up, then here the volume dipped, and here the volume started going up again while the fall happened. Okay, so right around this price, you would have reasonably gauged कि अच्छा, I think the trend has shifted. Okay, that was one. Volume was one clue. Another clue was your simple higher top, higher bottom progression. Okay, that has been happening here, higher top, higher bottom. Then here you see uh, higher bottom. Then here you see a lower top. Here you are seeing a lower bottom again. And again you are seeing the same top, and once this lower bottom gets taken out, you know that this higher top higher bottom progression, there is some problem in it. It is not a clear uptrend. You see the volume is going up while this happens. Again, you know that it's not a clear uptrend. Plus there's a gap out here and a gap out here. When we study about gaps, even that will give you a certain clue about how the trend is headed. So when all these red flags are there, you have to consider the weight of the evidence, the insaf ka tarazu, it's going on which side. And when the weight of the evidence is pointing towards a reversal, then you can say that the price is reversing or the price has reversed. Okay, so this is what the Dow sixth rule says, that a trend is assumed to be innocent. It is assumed to be continuing until the weight is shifting on the other side. Okay, it's like that IPL rule that if the umpire gives not out, and then if that uh, captain takes this, so the third umpire cannot reverse the umpire's rule until there is evidence for doing so. Okay, so it's like that. Okay, so this was the last rule. This rule is one of the most important rules when you do weight of the evidence. When you have several indicators of your chart and you are confused when few are saying up, few are saying down, what are you going to do? You are going to remember this. Which way are the scales tilting? That is what is likely to happen. Okay, so this is the sixth rule. Now, I told you in the start that Robert Rhea, Hamilton, and Schaefer, they are the ones who actually formed these Dow rules when they read his articles. Okay, so Robert Rhea was actually handicapped. He got into an accident and he was bedridden. And he had a lot of time to go through Dow's articles and verify them on historic price data. Okay, and he said that the Dow theory is valid, but there are a few assumptions that or a few hypotheses which must be accepted without reservation whatsoever. So if you want to use the Dow theory successfully and understand how to use this perfectly, you have to assume that these hypotheses are true. Okay. So the first hypothesis is manipulation. Manipulation is possible in the day-to-day movement of the prices. Okay. And secondary or intermediate trends may even be subject to such manipulations. But the primary trend cannot be manipulated. That is the assumption. Okay. He acknowledges that by price manipulate price gets manipulated. There are operators in the market, all that, but they can affect the price to the extent of the intermediate trend. Now, if you remember, the intermediate trend goes on from a few weeks to a few months. The primary trend goes on for at least 9 months to 2 years. He's saying that the primary trend cannot be manipulated. No manipulator would be powerful enough to manipulate a primary trend. Okay. The second rule, the averages or the price, they discount everything. This must be accepted. Okay. The fluctuations of the daily closing prices of the indices, okay, they comprise of the hopes, disappointments, knowledge of everyone who knows anything of financial matters, and the reason and effects of coming events. Even the acts of gods are properly discounted or anticipated in the price. Okay. If there is an earthquake and all, the prices quickly factor in all those things as that happens. Okay. That is the second assumption. And the third assumption is that the theory is not infallible. Okay. You are required to be very impartial, okay, without a bias in your head when you are studying this. So if you like a particular stock, okay, as much as you would want it to go up, if the evidence or the weight of the evidence is suggesting that, oh, it may not go up, you have to be impartial. Now this is the most, being impartial is the most difficult task when it comes to doing technical analysis, which is why sometimes I just block the name and flip through charts to identify which ones are looking interesting. And then I see the stock name, because I don't want that perception that this is a good company or this is a bad company to affect my chart reading. So guys, this was about the Dow theory. This is what we had in store for you in the first week. Remember, we have laid out a 12-week course for you, and we will come up with videos every week on Tuesday nights, okay, on our YouTube channel. And all these videos will be in this particular playlist that this video is in. So you might want to add that playlist to your library. And again, click on that bell icon so that whenever there is something, you get to know first about it. Do this seriously, guys. Do this, study technicals seriously. um, as the time goes on, we will give you a few practice assignments also. If you want, you can go ahead and do those. They will only improve your skill, sharpen your skill. And our goal here is to educate everyone with the how to study the price and volume action in the market. Okay, the technical analysis of the markets. Why? Because these are the building blocks of quantitative indicators and all, which you can then develop yourself also when you go deeper into the markets. Okay. So yes, that's it. I think it's enough for this week. We'll see you in the next week, guys. Bye. Like, share, subscribe, comment. We will be really happy if you have any doubts or any things in the comments which you want us to address. And let's start a big discussion here, and let's be a proper community. Okay. Bye, guys. See you and stay safe.